Hey, 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 Tip Tuesday watchers, and welcome back to another episode. Ryan, what's up?
Hello, Katie. Thanks for having
Hello.
me back. Hello, everyone.
Of course, of course. I love these conversations, and I know that our audience loves them too. And guys, one way that you can show us your love is by clicking that subscribe or that follow button on whatever platform you are watching this on. It really helps us out a lot. And it really just tells us, you know what, keep on showing up, keep on delivering this value, keep on answering our questions. Right, Ryan?
Yes, yeah. Thank you. I really appreciate all the support and the comments and giving us more content. It's been great. We really appreciate it.
Totally agree. And this one is actually something that I've been seeing a lot of. So you're probably having this conversation more than I am because you're the money man, you're the mortgage guy, right? But in mom world online, we'll just say I am seeing a lot of questions about, I have a fixed mortgage rate. Why did my payment jump? So a fixed rate can still kind of surprise people, right? When their monthly payment changes.
Yep, that's exactly it, Katie. Because if you have that fixed rate mortgage, people assume, hey, it's a fixed rate, it's a fixed payment, right? But your interest rate, no, it didn't move. If your payment went up, your interest rate's the same. If you have that fixed rate mortgage, your principal and interest, the actual loan portion, as you said, Katie, it's locked in for the life of the loan. Principal and interest will not change. So when your payment goes up, it's not the loan, it's the other stuff, like you said, bundled into your payment, your property taxes and homeowners insurance. And those live in something called your escrow account. And here's how the account works. Each month, one, of your principal and interest. On top of that, the servicer collects roughly 1/12 of your annual property taxes and 1/12 of your insurance premium. They hold that money and pay those big bills when they come due. And so you're not hit with one giant tax bill or insurance bill all at once. So they also keep a small cushion in there, maybe a couple months. So there's a little bit of a buffer. But once a year, the servicer does what's called an escrow analysis. They look back at what they've collected versus what is actually due, and they project what your taxes and insurance will cost over the next 12 months. And this annual review could trigger an increase in your payment. And that's what a lot of people may be seeing right now. So the two words you want to know is shortage and surplus. A surplus means they collected more than they needed. That's good news. If it's $50 or more, they're required to mail you back a refund check, usually about within 30 days. Now, we're not seeing a lot of those, because we're seeing more shortages. A shortage means they collected too little because your taxes and insurance came in higher than what was projected. And this is where the payment jump comes from. Here's the part that surprises people. It's actually a double hit because when your taxes and insurance go up, two things happen at once. One, your monthly escrow rises to cover the new higher bills going forward. And two, you have to make up a shortage for the past year. So the gap that they collected of what has actually been paid, most servicers spread that shortage over 12 months and stack it on top. And that's why you have a higher payment. So you're paying the increase and paying back the gap at the same time. And that's why, a modest tax or insurance bump could feel like a decent jump in your mortgage payment.
Yeah.
So, and right now, a big culprit, as I know, Katie, is insurance. Premiums have climbed across the board, here in Arizona and really everywhere else. And property valuations have gone up too. Home prices have gone up over the past decade, pushing taxes up. So a lot of homeowners are seeing both go up at the same time. So really, I just wanted to kind of cover on this, Katie, is like what options you have, and that's always what I want to discuss with our past clients. And really, you want to read the analysis carefully and make sure it's correct because mistakes happen. Maybe a wrong tax amount, insurance policy counted twice. It's worth a look. It doesn't happen often, but sometimes it can. But second, you could pay the shortage as a lump sum instead of spreading it out. That removes that catch-up portion that I mentioned and really softens that monthly increase, though it still will change because costs have gone up. But third, this is a big one. This actually gets to the root cause. You could shop your homeowner's insurance.
Right.
I've always trusted my insurance agent. I've had it for a long time. But when I kind of finally looked at it, I'm like, wow, this has slowly been going up over the past, 5 years. You want to kind of get some fresh quotes, and show maybe your current insurance agent if you're able to find something better, if they could match it, if they could do better. It's always good to kind of shop around and see what's out there and see if you could do better. And on top of that, property taxes, there's not too much you could do with that. home values go up, your taxes go along with it. You could maybe appeal the assessment of how much your home is worth. There's a deadline to that, but I could guide you if that's something you want to do. That doesn't always work. It's not always an option. So usually the home insurance is the first one to look at. So wanted to make sure I went over those two options if you're wanting to get that lowered.
Absolutely. No, I appreciate you going over that because that was a question that I had. If we were to find insurance that is, a better price elsewhere, can we switch that? And what does that look like? Like, you want to make sure the bank gets that information because, something that we talked about a few episodes ago is what happens when you don't have insurance. So we don't want that to slip through the cracks, right? Can you speak to what a homeowner should make sure happens if they do change their insurance?
Yeah. So if you change your insurance, a lot of insurance companies, because they know the barrier to switching was kind of high, they try to make it as easy as possible. So if you find a new insurance provider, you want to make a switch, you want to go with a different policy, a lot of the times they'll just ask you, who is your insurance provider? And they'll actually send over the new invoice to that escrow department of your insurance provider and make sure your other one is canceled and make sure the new one is in there and started. And what they'll do is they'll do a new escrow analysis and adjust it if it did come in lower. So that will help your payment. So that's really going to be the first step of the process. But you'll still want to do kind of your own work on top of it. Still call your mortgage servicer, contact your escrow department, and just say, hey, I just want you to be aware I switched insurance provider. They will be contacting you. And maybe even follow up within 30 days just to make sure they got the policy and everything's been set up. So it still takes some follow up on your part just to make sure everything is in there. The new insurance provider is in there, the new premium is in there, and make sure that's all being paid. So it does take some legwork just to make sure that everything is finished up and ready to go.
Absolutely. And I like what you said about, potentially a break on property taxes as well if you appeal, the value. But then there's also some people that might be eligible for a break on their real estate taxes, for example, veterans.
Yes. Veterans could get tax breaks here in Arizona as well. Not everybody knows that. Or even if you actually bought a home as an investment and switch it to a primary residence, that could give you a tax break as well.
Yeah.
So it's always good to look at that too. Maybe talk to the assessor's office and see what kind of tax breaks are available. Insurance is always kind of the big one people look at, but taxes are a good one to take a look at also.
Yeah, totally agree. And last question. So your escrow analysis could come by snail mail. Maybe it gets emailed. Maybe you just have to log into your online portal for whomever your bank is to get that notice. So it just kind of depends on how you've agreed to receive these notices, I think is how most banks work. So homeowners need to be keeping an eye out for this. But what should they do when they receive an escrow analysis or payment change notice? Is there anything outside of just run through it and make sure everything is accurate, like you mentioned? Is there anything else that they should be doing?
Yeah, I think the best thing to do, especially if you get the escrow analysis and your payment has increased, is identify what really changed. And obviously, you could actually go on to the assessor's office, whatever county you're at, look up your property tax ID, and try to find how your taxes have been trending. A lot of the times, if you've seen a jump, you'll know that's where it came from. Maybe you could look into it and see if there's anything you could do to get a little bit of a tax break. Or if it's your homeowner's insurance, you could look it up. You could go into your provider's portal. You can see how much your current policy is. A lot of people don't check that often. I know I didn't,
Yeah.
and see how it's been trending. If you've seen a big jump, maybe start making some calls. So that's the first thing you want to look at is did it increase, and what increased your payment the most? Was it taxes? Was it insurance? Was it accurate? And go from there.
Thank you so much, Ryan. I appreciate all of the awesome info on this. And I know that it helps answer or at least calm some nerves out there, because that can be alarming when you think, hey, my payment's fixed, my payment's not going to change. And then all of a sudden it does. And, it's higher. Right? Like, we don't mind when it's lower. We're like, okay, cool. We're not going to question that. That's fine. But it's when it's higher. That's the problem. All right, guys, if you want to catch any of our previous episodes, hop on over to our YouTube channel. It is at Team EvoAZ. That's our handle. Scroll down just a little ways. You will see the playlist for Real Estate Tip Tuesday, or on your favorite podcast platform, do a quick search for Arizona Real Estate Radio. There you'll find us. Please like, download, subscribe, follow, share, comment, all the things. We appreciate it, and we'll see you next time. Thanks, Ryan.
Thanks, Katie. Thanks, everyone.
Bye.
Looking for the right home loan can be overwhelming, but it doesn't have to be. Hi, I'm Ryan Gilliam, an Arizona native with 20 years of experience helping families find the best mortgage solution for their needs. Whether you're a first-time home buyer or refinancing, I make the process simple, stress-free, and tailored just for you. I help you access better rates, offer guidance tailored to your goals, and make the mortgage approval process easier every step of the way. Your best mortgage starts with the right partner. Let's make your home goals happen. Reach out today.